Good afternoon, everyone. Thank you so much for joining us today. I am Linda Elliott. I am a local realtor in Santa Barbara. I actually grew up here in Santa Barbara, went through a lot of the schools, left for a while and came back. And now I get to do what I love more than anything, and that is help people buy and sell their homes. I work with everything from first-time home buyers to very savvy repeat buyers and sellers, and everything in between. I am here today with Jeff Boxler. He is a loan officer with Guaranteed Rate, and he has been doing this for over 20 years. So he is really an asset to our community. So Jeff, welcome.
Thank
you
you for
for being
having me,
here.
Linda. Happy to excited about this topic today.
I really am too. Jeff and I have talked a little bit about this as we've had different buyers face different challenges and have different questions. And there seem to be kind of some reoccurring topics, myths, challenges. So Jeff and I thought it would be a good idea to just kind of go through some of those. Jeff, I'd like to first start with you explaining just briefly to our listeners what is the quick process, and what your role is differ from, say, the underwriter, and how does this process work?
Yeah, that's a great question. And what I see happen often is not understanding the two roles in a mortgage process can really kind of shoot yourself as a client in the foot, because you're feeling like the loan officer, which is my role, okay, and is the same as an underwriter, okay? And that leads to sometimes holding back communication or sharing information. And so the important things to know about what a loan officer does and an underwriter does: loan officer's job is, first of all, the face of the company, right? So in your community, the loan officers on the street, they're getting to know the realtors, they're getting to know the insurance agents, they're getting to know the properties, etc. They've got a good understanding of where you're buying, okay? And then the second piece is they've got a good understanding of the different loan products that you might need and want to use. So their job is to help you get pre-approved. They're the ones that pre-approve you, okay? And when we don't want to jump into the whole details of what a pre-approval process is. We've done talks about that, and we're happy to answer questions individually on that. But overall, the pre-approval process at the very high level is the loan officer marrying guidelines of a specific investor bank, okay, with your credit profile, okay, and saying, yes, you have enough income, you have enough assets, you have enough reserves after for the purchase, and your credit history, etc., and credit score meets the requirements of this investor, okay? So the loan officer has to understand guidelines well enough and understand you and your story well enough and get enough documentation from you to validate your story that they feel very confident that the referee, who is the person, the goalkeeper for your loan process once you actually find a property, that they are the ones that actually are able to give you a rubber stamp of approval that legitimately you get to have this loan from, for my company, it's Guaranteed Rate. So again, I sift through everything, your income, your assets, validate what you said on your loan application, look at your credit score, look at the guidelines for whatever investor that looks to be the have the best interest rate or the best mix of things for your qualifying. And then you get a offer accepted, we move you through the process and get you in front of the underwriter. So your whole profile goes in front of the underwriter. If I do a good job, and 20 years of experience allows me to do that a good job in a lot of loans of all different loan types, right? So I have a very good feel of what underwriters are looking for and a good feel of how to review guidelines and when to know whether they're gray or not, okay? So Then it gets in front of the underwriter. The underwriter then is the one that is policing for the company that loans are given to people that fit the guidelines. Okay, so they're the official. So we get the initial approval typically from the underwriter. They say, hey, we still want to validate X, Y, and Z, or look under this rock or that rock. We do those last few things and we get final sign off from the underwriter. That means that the goalkeeper has said, you're welcome to move fully forward with this loan. We're going to give you that money. Guaranteed rate's going to give you that money, or whatever mortgage provider you're offering. So why I give that color and why it's such an important question from Linda is because I'm helping you walk through this process and helping guide you through to have the best chance of success. Okay. So giving me all the information up front and not withholding, maybe we shouldn't tell Jeff. I'm not the one ultimately deciding whether you're approved or not. Okay. I'm helping take your story and present that story in a way that the underwriter sees this meets the guidelines, because there are, just like law and everything else in the world, there's always layers of gray, and how you tell that story, how you position things can matter, and can matter a lot, because the underwriter sees it poorly put together and the story not making sense. Their first disposition then is going to be, I don't trust this, I don't feel good about this. And now from then on, they're wanting to look under every little thing to make sure that they're not signing their name to fraud or to a loan that's going to go bad, or that's very important to them. So you want that package presented to them in a nice, buttoned up, bowed up way. And so that's why it matters a lot that you share the information, and it's not like, underwriter just asked for this, you never shared that with me, and then you're saying, oh, by the way, yeah, Jeff, I do have a divorce in the past that I didn't want to tell you about. I've been paying $4,000 a month in child support out of this bank account that I didn't want to show you. And now some background check stuff through the typical mortgage process is uncovering this that I wouldn't have been able to. So that's probably more color than you were looking for, Linda, but
Nope.
hopefully that's helpful.
That's great. That is what I would want to encourage my clients or anyone who's listening to this. When you have selected that loan officer, be forthcoming with them. They are on your team, which is the reason why it's really important to select the right person and create a team of people that you really trust in the process and that you can trust with your personal information so that they can guide you accordingly. There are so many different options when it comes to lending, and not every loan fits each person. So by you having all the information to advise them appropriately, it also allows you to put forth the best package. So no, I appreciate all the detail.
And to add a little color about that there's so many different types of loans. We have 40 investor relationships, which means 40 banks or like mortgage brokers that we're connected into. Okay. We would not have that many if we didn't need that many for so many different individual case studies. We usually like to have 2 or 3 that kind of fit the same criteria, but even call it that, you're still coming up with 15-ish different like product mixes, and not just each broker is got 4 or 5 different kind of, here's what we do best. So know that there's really a wider range of how people fit buckets and boxes, and to have someone experienced and knows where you fit best and where you'll then get the best interest rate given where you fit, is really important.
Well, speaking about the whole trust and trusting your loan officer and trusting the real estate agent that you select, you and I talked about some of these typical myths that people hear, or I heard at a meeting the other day, someone says, it's your brother-in-law, they kind of peg the brother-in-law, that we all have people that are whispering in our ears about different topics, and sometimes they're not an expert when it comes to lending. So do you want to talk? I think you and I talked about 5 or 6 that are kind of common myths. Do you want to?
Yeah. I think, and that's what we're hoping to share today is, not all loan officers are created equal. Not all loan experiences are created equal. Well, a lot of people look at it as like, this is a means to an end to get the money, to get the house that I love. Don't look at this part of the process as everyone is a commodity. Like, it's not a commodity experience, and it's not a commodity on many different levels. So here's some things that I was talking to Linda about that I'm like, I really think we just need to get this out. And I see these happening more and more lately as our industry, the number of units of loans has dramatically dropped. So there's a scarcity in our industry, which oftentimes scarcity leads to less good decisions, less ethical decisions that I haven't seen in probably 10 to 15 years. Okay. So I would say this is a timely topic, and it's important, just like, oh, ears perk up. Maybe I should ask another question. Maybe I should look a little deeper. So mortgage myths and bait and switches really is our goal for today is dropping into that. And then so here's high level, and then we'll go into each. Okay, so hopefully everyone can see my screen. Pre-approval without rates and points. Okay, so I'm just gonna read them all through really quickly, and then let's dive into it. Not sharing updated numbers going into a weekend when you're going to make an offer. Excessive points to appear as low interest rate. Okay. Going with 0 points or with credit options is a recommendation. I can talk about why right now. Free refinance, later gimmicks, and we'll talk about what that is. And then not locking in your rate. Okay. So let's talk first about this pre-approval, and I'm just gonna, the reason I wanted to read it through, because I want to take this away from the screen for now. But pre-approval without rates and points. Okay, so why this matters is if I write you a pre-approval letter saying you qualify for $800,000 with 20% down, and I do not put in interest rate or points there, okay? If the interest rates, if I pre-approved you at 5% and now interest rates are 7%, do you actually still qualify for that purchase price? We don't know. You may not. You may not qualify if you have to pay points, because that's money that you needed for reserves for qualifying for the loan. You may not have that money to pay the points. Okay. So when loan officers write pre-approvals without interest rates and points, it doesn't mean anything, because rates could jump up to 10%. Do you still qualify? If you're a realtor, you want to know that this letter actually meets today's standards and what we're making an offer for today. I don't care if you were qualified a year ago at a rate 1% lower. I care if you're qualified today. Okay, so that alone, that letter, make sure whenever you get a pre-approval letter that it includes an interest rate. Here's another reason why loan officers don't include that interest rate. Okay, they don't, because they don't want you to know what their current rates are, because they're worried you're going to then go online, look up what current rates are, maybe call another lender and start shopping them before you even get an offer accepted. Okay. And it's like, that's like a concern. Is like, hey, I've worked so hard to get you pre-approved. I'm helping you out. And I don't want you at this point in the process to go rogue on me, you know. And then the realtor's going, wait, you're going with an online lender that doesn't even know your story and doesn't know what they're doing, and you're calling them on a Saturday saying you found a better interest rate. Okay, so the interest rate is more to give you grounding on where you're at for your payment. Okay, and that's our next topic, which I'll talk about in a second. But also to make sure that it's grounded in what you actually got pre-approved for in the first place, is the interest rate, what you got pre-approved for, or the points, etc. Okay. The nicety for that pre-approval letter is Linda will have to write an offer for you. Okay. And within the offer, it's going to ask what the interest rate and points should be. Okay. So now she has information that she needs to fill out that document and complete the offer. Okay. So on that topic, Linda, Do you find, I'd love to hear back from you. Do you find other lenders putting rate and points on their offers? Do you pay much attention to it on their pre-approvals or not? And
Well, I only
and
work
what do
with
you find the
lenders that
majority to be? Go
I
ahead.
only work with lenders. I work with a very few number of lenders, and it's
Yeah,
lenders that I have vetted and that I have experience with and that I know have a really good reputation in the community.
yeah,
Um, it's particularly, as you know, a very competitive market. And when I am bringing an offer to the table, I want to make sure that my clients can do exactly what we say they can do and they can
yeah,
perform. And it gives
yeah,
the listing agent that peace of mind on the other side to be able to go to their seller and say, these people are solid. They are approved with this lender. They are approved at this interest rate. They have X percentage to put down. I have verified their funds. We can take this to the bank that they are able to close. That's what a listing agent wants to know. If I'm the listing agent, that's what I want to know.
I
So
love that.
I work both sides, and the lender is definitely a critical component. Do we get lenders from out of the area? Of course. Maybe people have a banking relationship or something that
Yeah,
they want to
yeah,
use. But again, I'm going to go reach out personally to that lender and I'm going to get a feel for it. And I'm going to ask them some really important questions to put me at ease that my buyers are going to be represented appropriately and that it really is a legitimate under
hmm
either an approval or an underwritten. So yeah, I'm very selective.
I love it. Yeah. Well, and then the next piece is in regards to these interest rates, we'll go into number two, is not a lot of lenders, because they don't want you going shopping, they don't share the updated numbers with you. So you're working with Linda and you're like, Linda, should we go offer at 800 or 825 or a million or a million five or whatever, right? Like there's usually a range that you're going back and forth with your realtor about. And it's really helpful and valuable to get updated numbers to see how much does it impact my monthly payment and out of pocket if I go up by $25,000 or 50 grand or 100 grand or come in $50,000 below, etc. And then have real-time numbers, because what you don't want to have happen as the buyer is to come out of the week and have your offer accepted. You haven't heard about interest rates for a month, okay? It's not on your pre-approval letter. You didn't get updated numbers from your lender. And now on Monday, you're getting told interest rates are 0.5% higher than they were 2 weeks ago, which is real time what has happened recently. And now you're going, whoa, I didn't realize my payment was going to be $300 more. I wouldn't have felt comfortable at this price point. Now you're really in a far more stressful situation than you may have been had you been eyes wide open. So ask your lender for updated numbers when you're asking for the pre-approval. So they go hand in hand. You feel very clear on what you're doing, why you're doing it, how much you're going to be paying, and then you can go from there and and then Linda can really represent you hard with that seller to make sure your offer stays at the top if you're multiple offer situation.
Yeah. So let's jump into the points and how that
Yeah.
is used in
Okay, so just real quick, what points are to buy down your interest rate. So at any given day rate, let's say your interest rates are 7% or whatever they are, maybe that costs you 0 points. You'll have still lender fees, appraisal fee, title escrow fees, etc. But there'll be what's called a par rate. Okay, let's say it's 7% today. If you want a rate that's lower, you can get that, but you're gonna have to pay extra in what's called points. Okay, points is 1% of the loan amount. If it's a half a point, it's a 0.5% of the loan amount. Okay, so what often online lenders over most, what they'll do is they'll hide on the second page of your breakdown of fees, they'll hide 2 points cost, so 2% extra in fees. Okay. But that'll allow them to say, instead of 7%, we got 6.375 interest rate. And you're like, whoa, this lender's offering me 6.375. This other lender offered me 7%. Like I should definitely go with the 6.375. Okay. Well, in a market like today, when the expectation is rates are going to go lower, Okay. First of all, paying points doesn't actually make sense 90% of the time. Okay. Because you will have a refinance opportunity far before the time that those points, the cost of those points save you money. Okay. Because you're saving money per month. You're paying a lot of money up front to save a little bit of money per month. And then ultimately that little money per month will equal more than the money you paid up front is the idea. But if you don't have the loan long enough to cover those fees up front, then it didn't make sense to pay the points. Okay, so they're using this as a way to show like we've got the best rate in town, but you're paying the most to get that rate. So whenever you get that sort of scenario, always ask for the 0 point option. Okay, so great, 6.375 looks amazing. Can I see what your 0 point option is? And maybe even with some credits. Okay, because you can get money back to cover things. So use that as your, make sure you're always trying to compare 3 options, in my opinion. Paying points, no points, getting some credits back. And then that actually goes in with number 4 is like, given the rate environment, the expectation the Fed's going to lower rates in the future and over the next couple of years is the expectation right now, that paying 0 points or getting credits back typically makes far more economic sense for you, because it's going to pay itself back immediately. And then you're going to refinance in 9 months, 12 months, something like that. Well, whatever points you pay won't pay yourself back in 12 months. They're usually 18 to 24 months or more. So you'll be refinanced long gone before those points are paid. So get money back from them. Have them pay you to do the loan. I literally am doing a refinance right now where the person's like, wait, what? I'm getting $8,000 back in credits. Like it's only $4,000 in fees. Like, yeah, use the 4,000 to pay your property taxes. Like we're paying you to do this loan. So it's possible. And there is a scale and a balance, but it's important to know that you can look at those.
Well, and have somebody like you walk them through comparing apples to apples
Yeah,
and what the best option in each individual case is.
you got it. We only got 4 minutes, but I'm going to jump into these next 2. Okay. Free refinance later gimmick. So a lot of lenders are saying, hey, we'll give you a free refinance in the future if you get this purchase loan with us. Okay. What I would say to that is that refinance in the future is going to be subsidized, meaning you're not going to get as good a rate as you would on the market if you just were to go to anybody and refinance, or even that lender to refinance. Okay. So choose your purchase loan based on what you need for that purchase. Do not make your decision because some lender's offering you a free refinance in the future. Because you could just go to the next refinance and see who's got the best at that time. There's no sense paying higher or going with someone that you don't feel as comfortable with or trust because they're offering you a free gimmick in the future, because it's not actually as advantageous, and it's not going to be as advantageous. And I can say that because we offer this, okay? We offer a free refinance thing in the future. I don't sell this because I don't think it's a worthy, honest thing in comparison to you just making the decision. It's distracting on you making the right decision today. And then lastly, not locking in the rate. Okay, so a lot of lenders, like I just had this, a lender can offer you any rate, okay, and say they have some rate available, and you say, great, like I like you, I like your deal. Let's say it's a purchase or a refinance. And you say, let's move forward. Like you're better than the next person. Okay. And then they never confirm they locked in your rate because they were hoping to play the markets. They thought rates were going to get better. Okay. And they don't. Rates don't get better. And now you were saying that you're going to use them over the other person because you thought they were better. Well, now rates have gone up and you're still not locked in. The way you can know that you're locked in, obviously you can ask them if you're locked in, put it in writing. But there's an official form in the loan disclosures that have to go out within 3 days of locking. That will say it's a loan estimate or a closing disclosure, depending on where you're at in the process. But the loan estimate in the top right corner will say whether locked or floating. Okay. So you want to lock. And I've been doing this long enough time. If you like the rate, you like the points, do not play the market. The market will make you wrong 50% of the time. And it doesn't matter how many online things your lender's reading, telling them to lock or not lock, float, whether the Fed's going to say this or that. It's all a gamble. So if you like it, take it, lock it. Okay. And then move on, because there's a million other things you're going to have to do anyhow in the process. And the great thing is, a lot of us have float down options. If you get the lock timing wrong, rates run down. Most loan products will allow you to float down one time during the process, and you get a get out of jail free card, and you get a little bit better interest rate. So there's no fear in locking, and it will only protect you, in my opinion. A
Jeff,
lot of talking.
awesome job. You covered so much really, really critical information. I almost felt like we had a little bit more time, but I
Yeah.
think the bottom line to all of this is that I would say to people, select professionals, interview them.
Yep.
You know, it's
Yep.
not uncommon. You're making one of the most important decisions of your life, and the most critical thing I think is selecting someone that you know, you like, and you trust, and you want to do business with, and you know will have your back. So that someone like a Jeff that, or myself, that can really advise you as to your options so that you can make informed decisions.
Absolutely. Yeah. And you feel free to take this little checklist and ask them, do you do this? Do you do that? Do you do this? What are your thoughts on this? Just to make sure and hear what they have to say. I mean, we all have different opinions about things.